Crypto traders. This is the only video you should be watching right now. The reason why I am doing these contents is because I have read narratives by respectable and influential figures in the crypto space advocating crypto as a form of transfer of wealth, but the truth is, they are an active market participants in the market who proactively move the crypto prices against retail traders to their own interest. And sadly, everyone seems to be trapped in that narratives. Crypto market may seem similar to stock market in so many ways, but they are two entirely different war zones. If you know enough, trading crypto can be simple because you can predict the price movement. And the key question that you have to ask yourself is whether you know enough of the crypto market. Being well versed in technical analysis is not enough, and the reality is, you don't even need to be a skilled technical analysis traders to profit from crypto. Using technical tools in crypto is potentially misleading, and you will understand why as we go along. To potentially profit from crypto, you have to unlearn what you were told in the stock market and open up your mind to unpopular and untold information no main players in the crypto market wants to talk about. I have been trading solely perpetual future Bitcoin contracts. The reason is very simple. All coins move in tandem with Bitcoin. And today I am going to shed lights on why and how Bitcoin is moving the way it is. And if you can understand Bitcoin in the crypto environment enough, you should be able to predict the movement accurately. I have prepared numerous contents that are going to blow your mind, and I promise you will not look at the crypto market the same ever again, unless regulators go hard to align crypto to the traditional financial stock markets. So be sure to subscribe to my channel. In order to profit from trading Bitcoin, you need to know who are the main crypto participants. They are the miners, whales, exchanges, institutional investors, and retail traders. Institutional investors are not actively speculating the markets as they are essentially long investors. For this reason, we will exclude them from the picture to simplify things, as their involvement are going to only define the upward movement of Bitcoin price. Miners are OG whales. Whales and miners have similar interests, so we will simply group them as whales. Whales hold enough cryptocurrency that they have the power to manipulate the prices. Manipulation? What manipulation? Isn't that illegal in the traditional financial market? The reality is that cryptocurrency trading market is not regulated in any sense. So open up your eyes, because we are going to dive right into the core of why and how Bitcoin moves. Next, exchanges. Exchanges have interest to manipulate the markets simply because when you trade perpetual future contracts, you are betting against the exchange. And when there are imbalance in long-short ratio, exchanges will have no choice but to manipulate markets for sustainability, so they are active participants in Bitcoin movement as well. Then it's you and me, the retail day traders. Short to medium-term price movement is going to move based on the net aggregate position of all of our open interest. And these information are translated to data such as long-short ratio and liquidation projection data. So these are the three main participants in the market you should know when it comes to trading cryptocurrency. And how do we profit from knowing all these? Well, simply look at their underlying interests and what they can do within their ability when it comes to influencing crypto prices. Exchanges and whales are going to make plays depending on net position of open interest. This is especially true for exchanges. They have to. Because futures perpetual traders are essentially betting against the exchange, and exchange have to manipulate the price. And they do it by moving the prices against the crowd. They liquidate positions proactively and eventually profit from it. Similarly, whales will always bet against the crowd. Why? Because the whales are constantly seeking squeeze play. Always. That is the only way for them to make short-term profits. And whales hold enough cryptocurrency collectively that they have the power to manipulate price movement to seek out squeeze play. And if you were speculating the crypto market as a trader, this is the angle and the only way you should be approaching when trading crypto. Real-time data on net position of open interest are available on various platforms, and if you know how to interpret them, you can make plays just like whales and exchanges. After understanding the market dynamics, you will realize that the current crypto market is like a game of poker. The only difference is you are playing with imperfect information in the game of poker. With the availability of on-chain data and real-time market data, you are going to trade crypto with almost perfect information. And you are going to find out why trading the crypto market is like walking into a soft table in a poker game. Don't confuse trading crypto with investing in crypto. In the long term, everyone should be bullish on crypto. Crypto-based businesses are going to be the most impactful vehicle of this generation, and now it is still in its infancy. So in the long term, the growth prospect is going to be exponential. I have been allocating capital in both investing and trading, and I think you should too. On the investing side, apart from Bitcoin and Ethereum, I have been picking out altcoins for a 5 to 10 years investment horizons. On the trading side, I am going to show you the limitations of applying various TA tools on crypto and how they tend to mislead you into making trading decision. Rather, I am going to show you the best indicators and market datas that you should be looking at and how to interpret each of them. And unlike most influencers in the crypto space, I will show you how to trade and how I profit from each trade. So subscribe to my channel and leave me a comment below to let me know your thoughts.